What's up, everybody? Michael Silva here. You're watching the Stock Market Brief Show. Look, the stock market bounce that we are seeing right now, or may see continue, does not look too healthy, and we're going to discuss that on today's episode. We're going to go over some bright areas, and we're also going to go over some dark areas, and we're also going to go over crypto. Got a lot to talk about on today's video, so let's just go ahead and get right into it. All right, everybody, welcome back to the show. Sorry I wasn't able to put a video out last week. I had to leave for a wedding. I am back now. If we look at the 11 sectors that make up the S&P 500, technology led the way up 1.5%. Look, the markets were down pretty severely intraday, but they managed to claw back quite a bit. But we're going to really dive into that and what it looks like for these various sectors. Utilities and energy were the ones towards the bottom of the list. This is how I think about it. When volatility is high, which it is, we'll get into, we need to really see what has been performing in this market year to date. And year to date, what we have been performing was energy, utilities, consumer staples, healthcare, and even real estate. Mainly the top two, utilities, energy, consumer staples. Now, the reason why I want to point these out is because they've been getting hit, right? So these ones been getting hit, but it's an overall uptrend, right? So we're cracked that 20-day moving average. We started moving lower. We about tagged that lower risk range. That's when I was looking into it, and I shared this with the Discord group. Utility seems to be the play here. In my personal opinion, I think it could still potentially head lower, but it is still holding that 50-day moving average. And this right here could very well be that buy on dip, as it has been a performing asset year to date so far. It's very hard to make these type of decisions when you start to see the VIX start getting above that 30 marker. That's when things get very volatile. But it's not just the VIX. The VIX did come out of that 25 level, and it fired off. And now we might be getting that back test. Might even come a little bit, obviously, lower, which could help elevate the market in this potential rally that we might see. If we take a look at the VXN, the NASDAQ 100, this is above. It closed at 33.83, so that's above the 30 marker. So it's once again just very volatile environment. Then you have Russell volatility over here too as well. That's also above 30. This is where some pretty significant moves can happen in the markets. So it's not the time to be very aggressive. This is typically when you want to start backing off the exposure a little bit, especially when you start to look at these charts. Now, the dollar continues to perpetuate to the upside. So if you're in the dollar, awesome. If you can use something like UUP has been working out quite well. Broke out of this bull flag, started heading higher. At some point, it'll probably take a little bit of a breather, but this big move in the dollar is clearly putting pressure on the markets, as well as gold and other various commodities. So gold got hit 1.98%. Now, this to me potentially also seems like a buy on dip type of action, and I'll explain why. The GLD, if you track weekly expected moves, this already tagged day one its lower risk range. It could still potentially head obviously lower, but this zone in here does set up for a potential good reward to the upside if we are going to continue to see volatility, or if it's going to come up from that area. So that's actually, in my opinion, a good area to scale into, especially if you believe that we are moving into somewhat of a little bit more of a hectic environment for the markets, and you might see more of a flood to safety as we've been seeing in the dollar. But it's not just gold itself. If you take a look at miners also got hit. So 1, 2, just big hits to the downside. And, as volatility goes, above 25, above 30, and potentially even further, everything to some extent gets hit. So when you really start to focus on what's been performing the best, and that volatility starts to subside, you start to look at, okay, what was performing in that current environment before the volatility, and maybe we should look at accumulating those as for a buy on dip. So yeah, XME, right, if it gets back above 58 and above that 50-day moving average, you got a big hammer candle, big volume. This might start bouncing here in the very near future, so that's something to keep in mind. And if you pair this with like the GDX went on this massive run. And now, in just a very short period of trading days, right, we just went to the 50% retracement level. So there's a strong possibility here that, hey, if you start accumulating this area, bam, we might be able to see some sort of a bounce here in the near future with GDX2 as well. So those are some of the things that I'm keeping an eye on. If we take a look at oil got smashed, right? It's below those key moving averages, but this has been putting in lower highs. It was severely down on the day earlier, but then we managed to bounce a little bit. I think if it starts cracking these levels, we'll start to see just this continued volatility here. So you got to be careful with oil and also energy names as it stands right now. Even though energy has been trending, a lot of those stocks have been getting severely hit. Not only that, copper was another one, big hit to the downside today, down 2.39%. Bonds came up a little bit, so this did look more of like a risk-off type move, but then obviously started to sell back off and close at the low of the day once again as the market started to alleviate some of those pressures to the downside. So, a lot of the questions is, hey, would this be a potential good area? If, is it going to start bottoming and start heading higher? It is a possibility, but if you look at like bond volatility, it's still rather elevated. So there's still strong possibilities that we'll see this fluctuate and potentially even break lower and then potentially head higher. I still think that the TLT, there will be a time to get into it, but as it stands right now, I'm still in my position, but it's such a small position. I'm looking to just scale into it or add into it, and I just haven't done it yet. So I'm still kind of watching to see how this one plays out. If you look at the 10-year yield, you can see here, right? Yeah, down 2.75%. So got hit a little bit today, but it's still obviously in a very bullish context with that little hammer candle. We'll see. It hasn't hit 3%, and you can see the the PPO starting to curl back over, which is not that great of a sign there as well. Now, why do I think that there could be a potential stock market bounce here in the very near future? Well, let's take a look at a couple of these BP charts. They are moving into this overextended territory. That doesn't necessarily mean we're going to get a bounce right out of the gates, but bear with me. I'll walk you through my thought process. We are going to that overextended on the bullish percent for the NASDAQ composite. The BP NDX also, boom, it's coming into that overextended territory to the downside too as well. And if we take a look at BPSPX, there's still a little bit more room to take a look at the SPY. So yes, we had this big sell-off take place. It's very similar to what we saw right here. It's very similar to what we saw here. Some very dramatic selling that has been happening. And now you can see a pretty bullish looking day. We came severely down. We were pretty right down to these previous lows, almost retested those lows completely. And then we closed at about the high of the day. Something interesting though, that is taking place is if you just look actually this sell-off where it occurred, right? Between the 18th and 25th, this sell-off that occurred was right around the 18th to the 25th, and this sell-off that occurred happened also between the 18th and the 25th. So for some reason, right around those dates, we've been seeing some severe selling taking place. So hey, in May, the sell in May go away. Pay attention to the 18th to the 25th to see some potential downside. What does that mean for the markets? Well, that's just speculation, but that we close at the high. If we start breaking above that, comes maybe back up to the 50% retracement level right around 435. That would still be below the 50-day, still be below the 20, still be below the 200. So this, it doesn't look healthy, right? Like I said, this does not look healthy. If it comes up and it's going to suck more people in, the upper risk range is at 440. It doesn't, it could come right back down to this lower risk range. We saw that happen last week. Not to say that that's going to happen this week, but just be mindful that was a bullish looking candle. And there are some charts like Apple that, tagged its 200-day moving average. The XLK also came down to an area of support. Those big sectors, right, could very well see a bounce from overextended areas. So what do you do in this situation? Well, we looked at utilities. We looked at mining. What you can also potentially do is if we start ripping up here, you can start looking for short opportunities too as well, or play intraday bounces to the upside if it wants to continue to hold. Another thing to look at is that 15-day chart. 15-minute chart, my apologies. We are below that declining 5-day moving average, as you can see. So yeah, we super aggressive selling. Now we're starting to see a bounce come back. So can we bounce up more? Yeah, absolutely. It's very similar to when we move up and we have a 50% retracement level. It can come down, it can revert 50 to 61.8%. Right back to that 5-day moving average, right to the upper risk range, right into this zone, could set it up for another potential short opportunity. We're not going to really actually see positive things develop in the market unless if we can really reclaim 450. So as long as we stay below 450 at this particular point in time, the bears still have control. Okay, so let's take a look at the Qs here. Qs, very similar situation as far as the selling goes, but you can see, boom, we're coming into this prior area of support. We found a little bit of a bounce here. Big volume type of day. We gapped down, red to green, right? Came halfway into the previous candle. It sets it up. It looks like it can bounce. This stuff looks like it can bounce to me, but it's just not. It's just, even if it bounces, it's still really not that healthy. You can see that in the 15-minute time frame. Very similar situation, so I'm not going to waste that much time. 5-day moving average has been holding as areas of resistance. So can we come back up here and then continue the trend? Absolutely. The trend right now is currently down, so just be mindful of that. The IWM, the trend is rather neutral, but it is down, so it is in bearish context. The neutral consolidation is in bearish context, I should say, but we had a gap down, close it around the high of the day. This sets it up for a potential move higher. A lot of those short type, high short interest stocks, maybe something to watch here in the very near future. If we start getting a bounce, we might see some of those names start to rip. If we look at the 15-minute time frame for the IWM, you can see here, obviously aggressive selling, declining 5-day moving average, and it could be forming somewhat of a bear flag here. We'll see if that's the case, but you can see clear resistance or support here could become resistance. If it goes up higher, that's the risk range, which is right just above that 200 marker. All right, so just to wrap it all up, everybody, look at volatility is high across the board. Volatility is high, so it makes it very hard to execute certain trades because things are crazy, right? So in crazy times, if you don't want to be involved in it, you back off a little bit, and that's as simple as that. If you do want to execute, you need to pay attention to what has been performing. What has been performing well, definitely utilities has been the massive come up in recent months here this year. So utilities is one to watch. I would also say pay attention to those risk ranges. Gold hit its lower range. That could be one to watch. GDX, that hit its 50% retracement level. Strong possibility of a bounce. However, just be mindful that when volatility is 30 plus, everything could get hit. So those are some things that I'm paying attention to. As far as the S&P 500 goes, the main thing here is it looks like we can set up for somewhat of a bounce, but we're still in bearish context. So overall, just doesn't look healthy. Hope that helps out, everybody. See you later.